Closed-end funds can trade at a discount to the value of their assets, and that's an opportunity to buy when they're discounted, then sell for a profit when that discount window closes. Today, we'll look at a fund that specializes in doing exactly that. It grabbed my attention because lately, it's been giving the S&P 500 a run for its money, and it's paying a yield of about 8%. This video from March of 2024 focused on funds that save you time. The concept was, instead of trying to figure out which preferred shares to buy, you can just buy a fund that specializes in preferred shares, like PFFA. It's currently yielding just over 9%. Instead of trying to figure out which business development companies to buy, you could just buy PBDC, which holds about 20 BDCs. It's currently yielding just under 9%. Today, we're looking at a fund that does that for closed-end funds, and I did mention it briefly in that video. The one that grew the most of that group was an ETF with the ticker CEFS. It's yielding just over 8%, and the distributions have been fairly consistent. Now, back then, I didn't buy CEFS because the performance was nothing special. I didn't do a deep dive on it to really understand what makes the fund different, and frankly, I missed out. It went on to perform quite well. Total return for the past year is 27%, which is impressive for an income fund. Now I think this fund is definitely worth a second look. By the way, if you're new to the channel, I retired in 2017, and that's when I got serious about researching my investments in greater depth, and this channel is where I share what I learn. I mostly focus on stocks and funds paying consistent yields of 8 to 12%, and if you'd like a copy of my portfolio, it's available via Armchair Insider. Link in the description, it's free. We're here for the income, so let's start with that. It goes back to 2017. The good news is no distribution cuts. It would be nice to see the income grow, but it has remained at 14 cents every month, which isn't bad. These spikes are special distributions that consist mostly of one-time capital gains. CEFS holds closed-end funds in the portfolio, mostly for income, but they also trade in and out of them for capital gains. Seeking Alpha is quoting a yield of 8.47%, which includes the special distribution from December of 2024. If you were to assume zero special distributions, the 14-cent regular distribution equates to a current yield of 7.6% as I record this. The Saba Closed-End Funds ETF, ticker CEFS, is an exchange-traded fund, or ETF, that invests in closed-end funds, or CEFs. In other words, it's a fund of funds. The basic concept is that there are hundreds and hundreds of closed-end funds. Many pay high yields, and some are better than others. CEFS chooses them for you. Normally, I don't mention the fund objective because they mostly just say something like income and appreciation, which doesn't really tell you that much. This one is more specific. The fund manager, Saba, targets closed-end funds that are trading at a discount to their net asset value. This is a key difference between ETFs and CEFs. The price of an ETF is equal to its net asset value. If that changes, the ETF will issue or redeem shares via banks that act as authorized participants. And they do that to restore that one-to-one relationship between price and assets. You could describe an ETF as an open-ended fund because the fund allows an unlimited flow of capital in and out of the fund. By contrast, a closed-end fund does not carry out this constant issuance and redemption of shares. If you want to buy or sell shares of a closed-end fund, you'll be buying them from other investors, not from the fund. Sometimes there are exceptions where a closed-end fund issues shares, but it's not part of the daily operation of the fund. The effect of having a fixed number of shares is that the price and the assets don't have to equal each other. If there's a lot of demand from investors for a closed-end fund, the price will increase, even if the value of the assets remain constant. This creates an opportunity that CEFS seeks to take advantage of. In other words, they buy closed-end funds trading at a discount, specifically where they think the discount won't last for long. That's a form of active management, and there are other funds that do similar things like FOF, which also yields about 8%. But look at CEFS versus FOF for total return over the past 5 years. 75% versus 43% is a huge difference for two funds that specialize in closed-end funds. Even though both Saba and Cohen & Steers are both active managers, only Saba is an activist investor. Saba doesn't just buy and sell funds, it tries to change those funds. Active investor means they take fairly aggressive steps to increase the returns for shareholders including themselves, of course. For example, they pressured BlackRock to offer investors the full asset value of 2 of their funds, even though they were trading at a discount to net asset value. Those funds were BMEZ and BIGZ, or Big Z. Saba uses strategies including lawsuits and nominating its own people to get on the board of directors of the funds. The founder of Saba, Boaz Weinstein, does not beat around the bush.
We don't have some friendly arrangement. Ask me anything you want. I fear none of their questions because they're so absurd. Okay, when they say that we're using some purported playbook to help investors in the short term, where is the long-term pain of making investors money?
If you want to learn more about how and why Saba uses these strategies, I'll include a link to the interview I just showed you a part of with Boaz Weinstein. We don't have time in this video to go deeper into Saba's activism, but the point is that they're constantly looking for opportunities to shrink the discount on closed-end funds. Let's take a look at what's inside the CEFS portfolio. Just under 100 closed-end funds from the major closed-end fund managers like Gabelli, Nuveen, PIMCO, and others that you may have heard of. The company that Saba has been battling with, BlackRock, is also in there. In fact, the fund's 2 largest holdings are currently BlackRock funds. Speaking of largest holdings, it's worth noting that the fund is heavily weighted towards the top 10 holdings. They comprise 62% of the fund. Regarding asset class, almost half the holdings are stocks, and the next biggest category, almost a third, is fixed income. As for leverage, when this fact sheet was published about 5 weeks ago, the leverage was 11%, which is fairly modest. From what I've seen, the major competitors to CEFS are the one I mentioned earlier, FOF, and the largest fund in the space, Invesco's PCEF, with over $800 million of assets under management. If we look at total return, it makes sense that PCEF came third because it's a passive index fund. Of the 2 actively managed funds, FOF led some of the time, but CEFS pulled away beginning in early 2023 to take the lead. If you'd like to learn more about how CEFS differs from its competitors and the nitty-gritty on Saba's battles with BlackRock, Juan de la Hoz's analysis gives an excellent overview. And of the articles I researched on Seeking Alpha for this video, his was my favorite analysis. I've looked on lots of free websites like Yahoo Finance and paid websites like Morningstar, but Seeking Alpha is the only place that I can find decent analysis of income stocks and funds. I'll put a link in the description to Juan's article that I just mentioned and a link for a discount on membership and a free trial. I use the premium level of membership. As of recording, the 2024 tax documents weren't available, but in 2023, there was plenty of return of capital, which most investors like, as long as it's not destructive to NAV. In 2022, there was hardly any return of capital, so it depends on what's happening in the portfolio of that year. Apart from the yield, here's what I like about CEFS. Saba is the highest profile active investor in the space, and they ruffle some feathers. I don't think Saba saves a spot for the BlackRock Christmas card at their head office, which, by the way, is the 58th floor of the Chrysler Building in Manhattan. I like the activism approach for 2 reasons. Number one, they're using it to boost returns in a way that I can't. It's a way to generate returns that doesn't depend on Nvidia earnings or interest rates or other factors. Number two, they have inside information. They know which funds in their portfolio they plan to target, and they can estimate their probability of success. As individual investors, we don't get access to that kind of information. CEFS boosts returns using leverage, but not always. They sometimes reduce the leverage to 0 if the risk to reward isn't attractive. So they refer to that as dynamic leverage. It moves up and down a lot. I'm not promising that CEFS will outperform the S&P 500 during a bear market, but during the last one, which was 2022, that's what happened. I don't know exactly why, but I'll assume it's because it's more diversified than the S&P 500 because of its exposure to credit. When selecting closed-end funds for my portfolio, I'm looking for buy and hold. Saba does some of that, but they also look for short-term trading opportunities. There's money to be made in buying CEFs at a discount and then selling them when the discount closes. It's a form of trading, and I don't have the time or the inclination to do that. So I don't mind paying someone like CEFS to do that for me. As for cons, I don't really have any major concerns about CEFS, so I'll just drop fees into this section because some investors might see this as a negative. The management fee is 1.1%, which does sound high, but they do a lot. Managing those activist investor campaigns involves a lot of legal work and manpower or woman power. When it comes to fees, you have to compare apples to apples. The competing fund, FOF, that fund charges slightly less at 0.95%, but that fund isn't an activist investor, and it has underperformed CEFS, as we saw earlier. There are two more expenses listed on the website. Other expenses of 1.39% refers to interest expense because the fund is leveraged, and acquired fund fees and expenses of 3.32% is a disclosure of the fees that were already embedded in the funds held in the portfolio. The yield is what you're paid after all these fees have been deducted. My take on fees is that if you can find another fund that offers the same exposure and diversification and total return for a lower fee, let me know. I might be interested. CEFS is an ETF, so the price is equal to the value of its assets. According to the fact sheet, the weighted average discount to NAV of the funds inside the portfolio was a 9.9% discount. That was on the last day of 2024. So even though CEFS doesn't trade at a discount because it's an ETF, the funds within it do trade at that 9.9% average discount. Another way to look at pricing is yield. This yield history chart from Snowball shows how the yield has spiked when CEFS issued special distributions each year and when the price fell during the 2020 pandemic crash. I can't tell you when the price is right for you, but I personally like it when it's yielding at least 8%. Snowball is handy for these yield history charts and also for distribution charts, but I mostly use it to combine my stocks from 3 brokerages into one simple dashboard. It also gives me more income-specific information than I get from, say, Schwab. Sometimes I'm looking to sell low-yielding funds to buy higher yields, so I'll rank by yield to see how I want to rebalance my portfolio. And the calendar function lets me see how many dollars will arrive on any given day of the month. Link in the description for a discount and a free trial. The first time I came across CEFS, I thought it was just another fund of funds. Now that I understand their activist approach, I'll admit I am more interested. I don't expect CEFS to continue keeping pace with the S&P 500 every year. Almost a third is in fixed income, so that would be pretty much impossible. I mostly like the steady income and the one-click diversification. So who is this fund really for? I think it's for income investors who already have exposure to other income asset classes like covered call index funds, business development companies, corporate bonds, etc., and they want to increase their diversification. CEFS includes exposure to those asset classes, but it also extends out more broadly to areas like municipal bonds, infrastructure, and health sciences. I plan to start a position in CEFS in the next 30 days. By the time you watch this, that may have already happened. If you want to keep up with my portfolio, Armchair Insider is going to be far more timely for you than watching these videos. Link in the description. If you want to see the other lazy income funds I covered in that original video, click here. That wraps it up for this look at CEFS. More Armchair Income coming soon. Armchair Income.